Hello friends. Stock market fell today by around 1.35% and closed in at level of 24,336. If we talk about technicals, then stock is trading between its support and resistance. It reached all-time high of excess of 26,000, and then it showed some correction and tried to take support near 23,250 level, and has since tried to go up. In recent few weeks, stock market was doing well, but today it gave a good correction. It failed to break out the levels of around 24,100. If we talk about today's market fall, there are major reasons for current market fall, and one of the reasons is jitter ahead of Fed meet. So Fed is yet not reducing interest rate at a very fast pace, and that is having a negative impact on market. Next, a big uh, issue with the market is fears of FII selling. We saw that in recent few weeks, FII have sold huge amount of Indian stocks. They are shifting to China. They think that Indian market is overvalued, and this is another reason why stock market fell today. There is another news point of spike in trade deficit. India's trade deficit was 37.8 billion dollars. That is also one reason which is weighing in on stock market. Then there are other reasons like weak global cues, and already we have seen that stock market has given a good run up in recent few months. That is also reason why stock market is not doing so well. There are stocks which also fared. First is Pidilite. The stock fell by around 3.56% and closed in at around 3,080. If we talk about company's technicals, then company is stock price took support of around 3,000 and reached all-time high, and then came down. Uh, 2,926 level is acting as a support, but company stock failed to break out from level of 3,246. So this is a big company of market cap in uh, excess of 1.5 lakh crores. It also has a high PE of around 80, so we can't expect this stock to do pretty well in long run. Though we can expect a consistent stock performance, since the company is a market leader and it's also has solidified its position. In last 5 years, it provided sales and profit growth of around 12 to 15%, which is not pretty high but which is decent. So we can expect similar sort of 10 to 15% CAGR returns in future as well. And don't expect it to re-rate and also to give a very high returns in terms of its profit growth. Next stock which fell is DMart. This is again a high PE stock. Company's PE is trading around 86, though it is still high. It was trading in excess of 100 few weeks back. Company's current market cap is around 2.3 lakh crores, and this is a leader in retail. However, because of heightened competition with online players like Blinkit, Zomato, Zepto, stock is struggling. The premium valuation which it used to enjoy it is no more there, because this DMart is not so aggressive when it comes to online sale. It is banking mostly on offline sale, and that is the reason why we can see that stock is struggling a bit. If we look at its technicals, then uh, company's stock price broke down from a crucial trendline support and is trading near 3,500. It has been from last three and a half years since the stock price has uh, been in a consolidation phase. It has not gone up. The high which was of around 5,750 is not even broken up, and company is trying to trade support of 3,500. There is one more support near 3,300 mark, and 3,250, and 5,500 is the stock price, which reached few weeks back, and then it came crashing down because of poor quarterly results. Next results are also something which is to be watched. If a company provides low double digit returns, then we can expect this stock also to provide CAGR returns of around 12 to 15%, similar to Pidilite. Next stock which failed today is Cholafin. Uh, though this is also a big company, it has a market cap of more than 1 lakh crores. However, uh, compared to Pidilite and DMart, this company's P is 27, which is very low. However, it is incorrect to compare P of one industry with another. But and especially financial companies, banks, these stocks do trade at a lower PE compared to the FMCG stocks. But it also provides sort of a cushion in terms of PE re-rating. Since PE is already low, it can't go down significantly from this level if company maintains its decent performance. And also, compared to the other two companies which we discussed, Cholafin has shown profit growth of 23% and sales growth of 22% in last 5 years. So this growth is relatively higher. So we can expect stock price to follow a similar trend as its profit growth, and current P also is not pretty high compared to its historical average. So this is again a stock which should be on our radar. If we talk about company's technicals, then stock price took a recent support of around 1180 and failed to provide a breakout of level of 1360. It touched high of around 1650 and then gave the correction again. For this stock, we need to see uh, how our next quarterly results come out. But this is again a stock which should be on investors radar. Next company which showed drop in its stock price in today's market trade is LTTS. LTTS stock price came down by around 2.4% in today's market trade. It closed in at 5,232. LTTS is operating in ER&D space. There are other companies which operate in ER&D space, namely Tata Elxsi, KPIT Tech, L&T Technology Services has a market cap of 55,000 crores. So it is also a decent sized company. It has a PE of 44, though it is higher than its uh, counterparts in traditional IT space, uh, but it is still low than some of its other competitors like Tata Elxsi and KPIT. Uh, However, company's profit growth is not very high compared to KPIT and Tata Elxsi. Its profit growth for last 5 years is 11%, which is also the reason why company's P is not very high. Its sales growth also is 13%. Uh, However, if we talk about company's technicals, then company's stock is yet to reach to its high, which it showed in year 2022 towards the end. So almost 2 years have passed and still company stock price has not reached to that level. So there's still some cushion. However, we need to see how company results come out. In the recent past, IT stocks are doing well, with the expectation that they'll show good quarterly earnings in coming weeks, good quarterly earnings in coming quarters. However, that should be reflected in actual results. If there is any disappointment in terms of profit or sales growth or margins, then we can expect the stock to consolidate or even break down from at their important level. So these are some things which we should keep in mind. Remember, friends, this video is not sell or buy recommendation. This is only for the educational purpose, and considering that only we should proceed. Please consult your investment advisors before taking any buy or sell call. Thank you.